Welcome to the Wealth Studying Podcast. This is episode 518. Today is May 4th, 2026. I'm your host, John Pugliano. I'm also the founder and money manager at investablewealth.com. Well, just wanted to review some of the amazing things going on in the stock market. I've entitled this episode Cashing In on Chaos and Cashing In on Earnings, because I really think that's the composite of what we're seeing right now in the market. Before I get to all that, just a quick notice. This Wednesday, May 6th, 3 p.m. Eastern, Joe and I will be doing a live Q&A over at the Wealth Studying channel on YouTube. I'll put a link in today's show notes. Come on over, say hi, and ask your questions in real time. And definitely check out the thumbnail of that episode. Hey, in any case, let's talk about cashing in on chaos first. Last week, I put out a blog post where I superimposed the S&P 500 from 2025, that's when we had all the tariff drama, and I superimposed that with the S&P 500 through April. The charts are eerily similar. And this is important because there's no doubt that this presidential administration governs through chaos. They have another 2 years left. I think the pattern that we've seen these past 2 years is very likely to be repeated over the next two. Now, it may not mesh up exactly like the last 2 years do with literally January to April or May performance. Now, that's not the point. The point is that they create chaos, the markets panic, and then before the issue is even resolved or even anywhere near close to being resolved, the markets not only bounce up from their V-shaped bottoms, but they go on to put on multiple record highs. You can see that chart over at investablewealth.com under the alert and blog notification section. I have it labeled with some, particular incidents that occurred, whether it be, Liberation Day as far as last year or when the bombing started in Iran this year. Bottom line, though, is take a look at when the Supreme Court struck down the tariff ruling. It was like 10 months after Trump had imposed his tariffs. That didn't even bring resolution to the whole tariff situation that we're still in. Remember, Trump has a meeting with China just coming up maybe sometime this month if he goes to Beijing this time. But the bottom line is there's still really no resolution to tariffs. The Supreme Court ruling came like 10 months later, but by the time that ruling came in, the market was up about 13, 14% from its previous record high from when Trump was inaugurated and before all the tariff kerfuffle even kicked in. But that's how high the market had risen just from that alone. And for anybody that had bought anywhere during the dip that, occurred through April of last year, the bounce off the bottom to the Supreme Court decision was over a 30% gain. That's how you can profit during these times of chaos. And again, I don't think they're going to let up for at least the next 2 years. Keep in mind here, if you wait till there's a resolution in the chaos, you've missed the opportunity. Right now, we are still in the midst of who knows what going on in Iran, and yet the S&P 500 is back to record highs. Just to give you some highlights of what happened during these past 30 days, during the month of April, when there's been really no certainty in what's going on in Iran, the overall S&P 500 was up more than 10%. And that's not 10% off the bottom. That's just up 10% during the month of April. That increase happened in about 10 or 11 days. So if you sat out during that week or two, you missed all the opportunity. And while the market was up a good 10%, within particular industries, it was up even more. And I know a lot of people, because of the war, they wanted to focus on oil or natural gas or other commodities. But you know what the real winners were? Technology. Technology up over 15% in April, and specifically semiconductors, which the market had been sour on last year, thinking that there was too much circular investing and that there was an AI bubble. Well, during the month of April alone, the semiconductor index was up over 38%. Okay, now let's shift here from cashing in on chaos to cashing in on earnings, because ultimately that's what this is really all about. And for the long term, or over the long term, earnings is really all that matters. People get caught up in the day-to-day fear and greed emotional cycle that takes place every day in the market. But over time, for the long-term investor, what really pans out is earnings. Earnings are the long-term winner. Well, we've seen earnings be the short-term winner this quarter. Let me tell you what's going on with earnings. Things are not simply going up just because there's a war in Iran or there's global instability. Company stock prices are going up because their earnings are at historical highs. More than half of first quarter earnings have come in, and while they always beat earnings estimates, which is kind of a joke, this time it's even a record high. They've beat earnings estimates by 84%. And on an individual basis, earnings are up more than 28%. So what that translates into bottom line earnings is that the S&P 500 overall has year-over-year earnings growth of 15%. And what's fantastic about this year is that while in past years, especially post-pandemic, the earnings growth has been dominated by the Mag 7, well, we're seeing a definite flip this year. Technology and companies like NVIDIA are definitely still the winners. But if you look at the 493 stocks that aren't in the Mag 7, this year we're seeing over a 10% increase on year-over-year earnings. That was for first quarter. 10% year-over-year increase from last year. That's exceptional in and of itself, but the fact that we're seeing that among the other 493 stocks is really what I want to key in on. The growth in the economy is not limited to just the Mag 7. In fact, of the Mag 7, it's really NVIDIA that's the big winner, because if you take NVIDIA earnings out of the Mag 7, then the other Mag 6 companies combined are only seeing about a 6% earnings increase. So for the first time in a long time, the overall stock market is out-earning the Mag 6. Now, a couple things on that. Number one, the Mag 6 have not suddenly started losing money. They're just having major investments in their AI infrastructure so that they can create better products and services for the future. That's the reason that NVIDIA and other semiconductor companies and related industries have such high profit earnings, because the Mag 6 are taking their extraordinary earnings and they're reinvesting in their business, buying these semiconductors and buying this AI infrastructure. So when you hear people say, how low profits are suddenly at Meta or at Facebook, that's not true. The profits are still extraordinary. They're just choosing to reinvest the profits. They can turn that spending on and off whenever they want to. And if they're correct in believing that AI is going to make their businesses more effective and efficient, then they'll also be more profitable, and those extraordinary profits that they make will grow even larger in the future. So no, I'm not down on the Mag 6. In fact, from a contrarian standpoint, this is probably a great entry point for some of those companies. The other thing to really key in on, and this is where I don't think we're in this circular investing, and I don't think we're in an AI bubble, and that's because the reason that profits are so high at the other 493 companies is because they are adapting these new technologies. They're using things like robotics and artificial intelligence and automation to streamline their operations, make them more productive, and thus make them more profitable. So for companies that say that there's too much AI overspending, so far I don't believe that, because we're seeing real concrete results. Profit margins, I'm talking net profit margins for the S&P 500, are at record levels. They're at over 13%. They haven't been this high in 15 years, and we're now setting new record levels. Historically, they'd run at around 10 or 11%. Now they're up over 13, like 13.4%. This is being driven by efficiencies. When you hear these scare tactic stories about 1,000 people being laid off or a slowdown in hiring, yes, that's always bad for the individual, but it's fantastic for corporate profits. If we can paraphrase Ronald Reagan, when your neighbor loses their job, it's a recession. When you lose your job, it's a depression. Well, yeah, if you're one of the workers that gets laid off or in that sector, that industry, It's bad for the individuals, but if you own those stocks, you're seeing your wealth grow substantially. And the important thing to realize here is that we are in the extremely early stages of implementation of any of this infrastructure. So, from the chaos standpoint, we have another 2 years of Trump in office and his chaotic methods. And from a productivity and a profitability standpoint, the infrastructure is just being laid now. We've got not 2 years, but probably a couple decades for that to ride out. And I don't think that's extreme when you go back and look at other inflection points of technology, whether it be the internet or telecommunications or social media or smartphones or the railroads or electricity for that matter. Hey, in any case, with the markets at or near record highs, I still think there's plenty of opportunities out there. We're finally starting to see maybe some bounce, and perhaps a bottom has been put in for software as a service companies. I've spoken and written about that in the past. Go check out my blog posts. There's been a lot of software companies hit. That's everything from SaaS companies like Salesforce to cybersecurity companies like Palo Alto. I mean, even the big Mag 7 players like Microsoft have taken a hit lately. I'm not telling you to run out and buy these. I'm telling you that I do own them. I've added to my positions. And I want you to keep in mind that whenever the media or the talking heads avoid or they hate a particular sector, that sector tends to do well over the long term. Right now, one of the best performing Mag 7 companies and the, for now, winner in AI is Google Alphabet. Take a look at their stock and the run they've had. But again, keep in mind, you go back 18 months ago, Google was one of the most hated Mag 7 stocks. It was claimed that they'd totally missed the AI opportunity. They'd underinvested. They let ChatGPT get ahead of them, and their search business was just going to be destroyed. Well, what's the scoreboard say? Take a look at Alphabet stock today. I think that's likely what you're going to see in the future with Microsoft and Meta and some of these other stocks that are currently being hated today. Well, hey, take that for what it's worth. See you this Wednesday over at YouTube for our live Q&A session.